Welcome to Commercial Real Estate Unfiltered, the podcast that takes the mystery out of commercial real estate and makes it accessible for everyone. I'm Caleb David, a broker, investor, and community builder with over a decade of experience helping businesses and individuals bring their visions to life. Here we break down the market, share expert insights, and talk about the opportunities that commercial real estate creates for businesses and communities alike. No fluff, no gatekeeping, just real, unfiltered conversations that empower you to navigate the space with confidence. So whether you're an investor, a business owner, or simply curious about commercial real estate, welcome. Let's dive in. All right, welcome everybody to Commercial Real Estate Unfiltered. I'm your host, Caleb David, and I'm really excited today for you to hear from our guest, Boris Sanchez. He's an MBA. He's the founder and president of Sanmore Investments, LLC, which is a Houston-based commercial real estate firm with over a decade of experience and over $1 billion in brokered and financed transactions. Boris has owned more than 1,500 multifamily units and leads a full spectrum commercial real estate operation, offering clients investment deals, lending solutions, and educational resources. He's a fierce advocate for financial literacy, and Boris blends theory and practice to help both new and seasoned investors grow their portfolios and build lasting wealth. Boris, welcome to the show.
Thank you very much, Caleb. I appreciate you having me on.
Yeah, it sounds you've got a pretty impressive resume, but I always am interested in people's stories, not just the numbers, but tell us how you got into the business and what inspired you on your path to what you're doing today.
So yes, I got to see the kind of the struggle from a young age. My parents were fleeing the violence in Colombia
Mm,
in the 90s. That's no secret.
yeah.
And yeah, we made our way to the US. My mom had to start her career as a very prominent attorney all over again
Mm,
and really start from sweeping floors here in the States. I always have been a kind of a young entrepreneur. I started my first business at 7 years old. It was a food delivery business in my own school. It went pretty well, but it was shut down by the teachers. So yeah, this whole thing, but it did teach me a lot about entrepreneurship and that I wanted my own thing all the time. I don't think I've ever taken allowance from my parents or allowed them to even pay for my school.
Yeah.
I went to college by myself. I went to get my master's degree out in London for myself,
Mm,
by myself. And when I came back about 15 years ago, I started working for my brother's real estate company as a loan officer.
okay.
And that showed me a lot of real estate. It showed me a lot of things that I don't want to do, which is always great. I believe it's not the path is not always linear and clear,
Yeah.
but it is sometimes showing you what you don't want to do, and that can be great as well. As a loan officer, I actually, yeah, I got to process a lot of people's home loans and stuff like that. But I've always just looked at the investment side, saying, man, I want to be there.
Yeah.
I started flipping homes back in 2012, but as I got to know the difference between commercial and residential more and more, I was really just gravitating towards the commercial side. I really like the idea of cash flow while you put properties in the market, and simple as that. Then I started really veering away from residential and more into commercial. My first apartment complex I actually bought back in 2013, and it was two fourplexes side by side.
Yeah.
I bought them at $140,000 and using one of the tools that you generally use for residential real estate, which is a hard money loan, flip loan, as we like to call it.
Yeah.
I bought that property at 140K. I reserved another $60,000 of renovations, came to closing with only $10,000.
Wow.
And lo and behold, a year later, I sold it and I made about $250,000 in
Wow.
profit alone.
Wow.
So that really opened my eyes into the world of commercial. And I said, this is what I want to do for the rest of my life.
That's awesome. I think the thing I love about commercial as well, that every deal is different, everything is nuanced. Get to be creative with it. And one of the things that you'd said is that 100% property ownership is still king. Talk
That's
to me
right.
a little bit about that.
I think it's a very non-talked about side of the commercial spectrum. The underdog, to be honest. Everybody wants to jump from flipping homes and doing really well to passive investments and syndication of commercial real estate, of large commercial real estate, thereby bypassing a very important and wealth generation side of real estate, which is small to medium sized commercial and full ownership at that.
Yeah. And so when you talk about that, do you mean, because I know a lot of people especially if they're newer investors, right? They don't have all the capital, so they get into partnerships. And what's your take on that?
So I believe, like what you had stated before, education is key. Financial literacy is a lifesaver. It really tends to generate all of the wealth in the world. What we don't know is sometimes what we run away from and what we tend to ignore. In this case, I believe if people knew more about how to leverage and some of the leverage options out there, like I said, hard money being one of them, I really think people would take the path of full ownership instead of just jumping on with other partners or even syndicating or even passively investing,
Yeah.
being in a GP or an LP in these transactions, whereby you don't, yeah, you might earn a good investment. Nowadays, it's like 50-50,
Yeah.
but you won't really learn a lot. Your experience as a commercial investor is very limited when it comes to being a passive investor in a syndication.
Yeah.
That's what I advocate is actually, hey, if you have the time, if you have the resources,
Mm.
which most people would be surprised by how little you can actually start with,
Yeah.
you can own your own buildings 100%. Then
Mm.
there are a lot of benefits to that instead of syndicating and bringing on partners as well.
Yeah. That's great. So you talk a little bit about the leverage myth versus long-term control. How do you see that applying in commercial real estate investing?
I believe knowing your leverage options can be a lifesaver. If you're jumping from flipping homes into the world of commercial real estate, I believe there you probably will be better, a little better versed at that, and the many different ways which you can leverage real estate. You can do hard money, you can do DSCR loans, you can do private loans, even hybrid loans sometimes. But yes, you can definitely have the whole breadth of experience as well as experience forced appreciation for yourself
Yeah.
by actually doing some. I'm not saying get down and get a hammer and nails and start building out. No, what I'm saying is if you actually just use a little bit of creativity, a little bit of knowledge, you can hire the right crew to manage, you can hire the right crew to build, and you can even asset manage it yourself and then experience wealth generation from forced appreciation.
Yeah. So how do you define forced appreciation?
Sure. Quite simply put, commercial real estate is like a business. If I were to buy a steakhouse that only sells two steaks a day and I build it up and now it sells 200 steaks a day, that the business is going to be worth more.
Yeah.
Same thing in commercial real estate, right? As a matter of fact, commercial real estate is many times valued over what a business is worth. I don't know if you've ever gotten down and actually compared what it is like to own a business versus
Yeah.
commercial real estate,
Yeah.
but cap rates work pretty much the same. They're a multiplier of the income the property's making. The
Yeah.
difference being that in a business, usually you have maybe between 2 to 10x what the net income is bringing or
Mm.
what the net income is versus in commercial real estate, it can be sometimes as much as 50 times what that commercial real estate business is bringing.
Yeah.
And so it is easier to try to figure out, or at least I would say simple to try to figure out how to raise the valuation of a property.
Mm.
Simply put, make it bring more money net.
Yeah. Makes sense. Makes sense. So can you maybe give a real example about how 100% ownership plays out over time?
Absolutely. Oh man, I can give you so many examples. So the longest property I've ever held was a 40 unit apartment complex that I bought back in 2018, and I bought it for 1.5 million. It was a completely dilapidated property, and over time, not all right away, we started rebuilding it using the cash flow from the property itself. Back in the day, I got a good bank to give me a loan on it, and I brought in money from a 1031 exchange. I brought I think $150,000 to the table from a 1031, which was a profit that I used for the sale of another property. And so I've held this thing for, yeah, pretty much 8 years. I used the cash flow from it to renovate pretty much the whole property. We had a kind of a quote unquote lucky break. One of the buildings caught on fire.
Mm.
Nobody was hurt, thankfully,
Yeah.
but it did allow me to speed up that process. At some point we got $330,000 to renovate about 8, 9 units that we ended up renovating out of that. Lo and behold, I just sold it for $4.3 million. And that was after holding it when not really putting much out of pocket at all.
Yeah, that's pretty incredible. What a great example.
Thank you. Yeah. I have some more short-term examples that I can give you.
Sure.
For example, this particular other one that I'm thinking, I bought this six-unit apartment complex off of, and people love to ask me, by the way, where do you find your
Yeah.
deals? I think it's one of the most popular questions that I get asked. I'm like, literally everywhere. I'm always looking. This particular one that I'm thinking of, I bought off of the MLS. So it was actually in the MLS for 172 days.
Wow.
The difference that I brought to the table was that I was looking at it with different eyes than everybody before me. When
Hmm.
I went out to the property, sure enough, the property was so dilapidated, so ugly, and nobody really wanted.
Yeah.
Even the realtor sign outside, the for sale realtor sign, it was completely on its side
Wow.
from just like neglect. I looked at it, and this property was not a six-unit complex to me. It was an eight-unit complex, and I knew that if I added as many bedrooms and bathrooms as I could, that would really maximize the value, the rentability of the property, as well as the actual value of the property.
Yeah.
And so I bought it for $250,000.
Mm.
And using the same kind of hard money loan, I added another $260,000 of renovations. So all in, I was about $600,000 all
Yeah.
in. About 6 months after that, I had fully leased. I had it fully leased. I had it finished. Added a bunch of two bedrooms, two baths, and a three-bedroom, two bath to it. And I sold it for $1.2 million
Wow.
after it being in the market for about 2 weeks
Wow.
at a really nice cap rate. It was like a nine cap
Yeah.
back in 2022. It was a lot.
That's a lot. Absolutely.
And yeah, my profit was over $600,000 in that deal. And that's a prime example of short-term forced appreciation and why some people should not neglect just full ownership of property instead of syndicating. A
Yeah.
syndication would have netted me probably a little under that. It would have netted me, I've seen three, four, five times over what I invested,
Yeah.
which is great, but it does take a good amount of years.
Yeah.
This was done under a year, and my profit was many times over what my initial investment was.
Wow. That's awesome. That's awesome. So you talk a little bit about cash flow versus force appreciation. Why does cash flow protect your foundation but doesn't necessarily grow your castle?
Sure, absolutely. That's also one of my favorite questions. In cash flow, I like to say that cash flow is a wealth maintainer, while appreciation, more specifically forced appreciation, is a wealth builder. The general average for any rental property, the general profit per month that anybody takes home from one rental property is about $250 per month.
Yeah.
If you really think about it, and in those terms, people don't really like to think in those terms, but I will put it in those terms. How many properties must it take before you actually start building wealth per month? Think about it. Four properties will equal 1,000. This is not to mention one AC going out that will cost you an entire profit of a year.
Yeah.
But let's say all things being equal, nothing breaks. It will still take you four properties to get to reach 1,000. It will take you, what do we say, 40 properties to reach 10,000 a month.
Yeah.
If it's, and in that case, 10,000 may replace your monthly income right now. But honestly, it's not enough. What it's doing is maintaining your current level of wealth. It does not, cash flow does not build wealth. What does build wealth is appreciation properties, just like I said.
Yeah.
If your listeners have never experienced receiving a 300, 500, even $1 million paycheck, I could just tell you that they're missing out on the greatest side effect of investing in commercial real estate, which is the appreciation side and the actual wealth generation side of it.
Yeah.
It checks like that have the power to completely change you and your family's life.
Yeah.
And the only way to get there is to cashing in the appreciation that you've built on a property.
Yeah. So when you're looking for an investment property, I know obviously you're sourcing it from many different places. You're scouring, you're looking MLS, you're looking probably even off market. But what are some factors when you're purchasing a property? What are some factors within that area that are important or are pointing signs to this is a good investment?
When I'm looking at a property,
Yeah.
I would say creativity. If I can deploy creativity on a specific project, then it makes it way more like attractive to me. I will give you an example of that. If I'm walking a property and the living rooms are huge, right? I'm looking at one bedroom, one bath units, specifically multifamily. Where back in the 60s, for example, people really wanted huge living rooms. If
Yeah.
you think about it, then people used to sit around the radio and listen to that. The whole family would come in and listen to the radio or watch TV at dinner time. Our society no longer performs that way. It actually is a very bedroom centric
Mm.
type of society. And people really rent according to the number of bedrooms and
Yeah.
bathrooms that it has.
Yeah.
So if I can maximize the space of making one bedrooms, maybe even splitting it, making two units out of that, maybe making two one bedroom, one bath units out of that, or even adding one extra bedroom
Yeah.
will bring an extra value to that property, thereby boosting it as much as I can.
Yeah.
In a recent property that I picked up, a 32 unit complex, the units were not even a crazy size. They were, I think, under 600 square feet for one bedroom, one bath. I started splitting them and making two units out of that, one studio and one
Mm.
bedroom, one bath with still sizable bedrooms, still sizable, respectable living rooms. And so where I would be getting $1,100 in a renovated unit before, I would probably be now renovating it and splitting those units and making about $2,000 a month just from the split
Yeah.
and just by doing a little more renovation.
Yeah.
So it really works well in properties that completely need a full gut.
Mm.
It really works well in C-class properties that obviously are needing it right now.
Yep.
60s, 70s products that you can completely be very creative on and add the most amount of value.
Yeah.
That's the area that I like to play in.
That's awesome. That's awesome. And I think you're right. It is that creative look and looking through eyes that maybe somebody else isn't. If
Right.
they're looking just at the surface and just at the numbers, they're really going to be missing something. So I think curiosity
Right.
is key there. Okay, so
Absolutely.
one of the things you talk about is the traditional Burr model. And maybe if you can explain to our listeners what that is and why does that model often fail?
Absolutely. So BRRRR stands for buy, renovate, rent, refinance, repeat. Nowhere in that strategy, and I will stress the fact that there are many different strategies within real estate. People sometimes get shocked when I say that. I'm like, wait, what? Many different strategies? I just thought we had to rent and then I would be rich from real estate. That's just not it.
Yeah.
If you heard me speak before, you know that I'm a big proponent of appreciation. So nowhere in this BRRRR method does it allow you to scale up, scale and take advantage of appreciation. It really does take a long time to pay down
Mhm.
a property. And so if you're just focused on receiving cash flow just so you can pay down the note, so you can refinance and do it again on another property, you're completely ignoring the time element of it.
Mm.
The opportunity that you could be instead playing with if you had a different opportunity, a more kind of appreciative opportunity. So that's why I invented my own method, my
Mm.
own strategy called the KISS method.
Okay.
Keep some, sell some, scale,
Yeah.
which allows you, like I said, to like just like the name implies, to keep some property, rent it out, enjoy the cash flow from it, enjoy the depreciation and the tax benefits that it has,
Mm.
but also it allows you to sell some and scale, which, like I've said before, you need to enjoy the appreciation that you've
Yeah.
built up,
Yeah.
the equity that you've built up from the property so that you can scale up and get bigger cash flowing properties.
Yeah. So what are some common mistakes that investors make that are when they're like they're half-assing the model?
I would say ignoring the time value of an asset,
Yeah.
or like thinking that they can keep it all. I'm not sure which of the gurus out there is touting this, but you don't have to keep it all. Matter of fact, you should not fall in love with the real estate or the real estate's cash flow. You should always look at an asset and say, hey, what else can I be doing on this?
Yeah.
Can I sell this? Can I refinance this? Can I enjoy maybe some cash out while maintaining my monthly payment with a different longer term financing option? And so I just think as people tend to fall in love with the real estate and the return that a property is making, instead of actually trying to make some moves with it and really enjoying the fact that that equity that you built on that asset can be further enjoyed and even made to boost your wealth generation.
Yeah. Yeah, absolutely. And so what are some of the biggest misconceptions that investors have about passive income?
Sure. The fact that it's really hard to achieve. It's really hard to achieve passive income from a small property, from a large property. It's hard to achieve, especially in terms of a hard to navigate economic market. And they just think that wealth is going to be generated from just picking up properties here and there. It just won't happen unless you have a lot of equity to play with, a lot of liquidity to start picking up property here and there. You must make moves. You must learn the and be creative in the financial moves that you
Mhm.
make.
Yeah, so it sounds what I hear you saying is you have to, if you're an investor, you have to be actively involved in your asset and in how you're thinking about the future. Because I think you're right. A lot of people have that mindset of I'm just going to buy all these properties and I'm just going to live off the income. And so I think one of the biggest takeaways that I have, and I think our listeners will, is the element of time. And I think that's so vital and probably very much overlooked. So how would you actually create durable, low touch revenue?
Durable low touch revenue comes from extremely low loan to value properties or paid off properties. That's another one of the things that I love to talk about that people just get surprised by. I'm very contrarian, as you can tell by now, but I'm a full proponent of paying off property.
Yeah,
In an age of rising taxes, in an age of rising costs coming from utilities, insurance, management, I mean, you name it, what hasn't gone up in the last few years?
yeah,
It all has. And but have rents gone up as much? No, they haven't. In a lot of markets, they've gone down.
yeah.
And so, what can investors now provide where they can gain more control over those costs? And I would say a big one is by owning their property outright. There is a better insurance that you can get. There is also a level of, for example, in my market, Texas, property taxes tend to be a big deal, and they are largely controlled by what sells and what doesn't sell. We don't have to report our sales, but
Mm,
sometimes, most of the times, when a property trades hands, something will get reported, or even when you get take a loan out against an asset, the county will take that as the valuation of the property. And
mm,
so, if you never take a loan out on it, you can fight your taxes and
yeah,
protest your taxes to be lower.
yeah,
And other elements like that of having a full paid off property that you really tend to enjoy. Now, if you combine all of the things that I've talked about, such as buying very cheap property and adding as most value as you could to it by ways of being creative and own it outright, that will probably bring you between a 15 to 25% return on your money every year.
wow. Do you find you touched on renovation some? Do you ever find that investors make the mistake of over improving a property?
Absolutely. It happens all the time. People often ask me, so what would you do to this property? What you wouldn't do? And a lot of when I ask that question to them again, they say, I want to renovate it to the point that I would live there.
Mm,
And that's just a false sense of over renovating a property.
yeah,
Most of us will never live in a property, in an investment property that we own. And I would say there is a level of good enough that you can reach
yeah,
that most people that are renovating fully tend to blow out by. Now, that being said, don't under renovate either. Nobody likes a what do you call it, a slumlord
right.
type where you're just like painting over the roaches in order to just call it renovations. That's not what I'm talking about.
Yeah,
You can renovate, obviously make sure that people are safe, that they have a long-term viability of actually staying there. That means sometimes looking under the walls
mm,
and making sure that there's no mold and make sure
right.
that the foundation, the framing of a certain project is done well
Mm,
and not corroded or moldy. So
right,
yeah, as long as you have all the basics taken care of, you don't have to put in travertine or
right.
natural marble in the walls and stuff like that.
Yeah.
That you can just go with the cheapest option. That'll be fine.
Yeah, and I think going back to what you talk about being actively involved as an investor and understanding the process instead of just being in syndication and collecting a passive check, if you are involved in that process, you understand that market and what you need to do to get it to that good enough. And I think so often people are looking for that perfection, right? And I think we're both old enough to know now that there's no such thing as perfection, and sometimes good enough is good enough. So what are some of the smartest ways that you think to build wealth in commercial real estate right now?
I would say capitalizing on the market right now. Right now is a perfect time to start picking up property on pennies on the dollar. There's pain in the streets. There are lenders out there that are just willing to get rid of property for
Mm,
pennies on the dollar.
yeah,
And I would say a good businessman only always knows a good opportunity and sees an opportunity when they see one. Right now, we're picking up property for prices we haven't even seen since 2013 when I started.
Wow.
I could tell in the next upswing that it's going to be even more aggressive than last upswing. And the very best advice that I can give you is, hey, look, just keep your eyes peeled.
Yeah.
Not everything is a deal right now. You have everything and runs the gamut from property that is over
Mhm.
because people are just hoping somebody will buy it
Yep.
to this those investors that are looking to liquidate an asset just because they're in pain.
Yeah.
And so if you learn to just keep your eyes peeled and learn to see and identify a good opportunity, you're for sure going to capitalize on this market.
Yeah. And so what kind of asset types or market types offer the best opportunities right now that you're seeing?
I would say there's a lot of opportunities in the multifamily market, self-storage market. I would say the office market, if you can maintain it a long time, if you must park some money for a while and you don't mind it being several years, 5 to 10 years down the road, I would say invest in office.
Yeah.
We see the beginnings of the office industry coming back in every single way. Here in this kind of buildings behind me, when I started in 2020, when I moved here to this building in 2020, we were the fourth tenant in the whole building.
Wow.
And now you can hardly park a car in the
Wow.
parking lot. And
Wow.
downtown also was like that. You had 80% vacancy in most of these buildings. Now it's down to 20 to 10%.
Wow. That's
And
a big
so,
change.
yeah,
What do
it's
you
huge.
attribute that to? I'm always just very curious about seeing that big of growth, especially in the office market right now. Are we seeing that landlords are now doing smaller suites? What do you think, at least in the Houston market, has been a catalyst for that?
I really think everybody being back to the office is obviously the main driver. Cheap office space is a good one. The
Mm,
rise of the co-working class
mm,
and even the hybrid models where companies are now just allowing folks to work from wherever it is. I think that's actually a very big plus. It's actually helped decentralize the office market. Now you see a lot of suburbs
mm.
coming up and a lot of suburban office space being leased.
Yeah.
And that's good. That's very good. But I would just really believe in the upward trend of office occupancy and now and going forward.
Okay. Awesome. How do you know when it's time to exit the deal?
How do you know when it's time to exit the deal? I think as a full 100% owner, I love that feeling because sometimes, and the whole reason I got into commercial real estate, into the commercial real estate space, is that I was able to put property on the market while it was earning cash flow.
Yeah.
And so for me, I don't really mind if a property is overpriced out there as long as it's earning cash flow. And if I don't need it to be sold, then I want to price it at that level.
Yeah.
If you're starting to see the fact that you need to get out of it, that's different, right? If you're starting to feel the pain of low occupancy or maybe a high turnover rate or anything like that, then it may be time to start selling it and letting somebody else take the helm at that.
Yeah.
What we're talking about here is enjoying the equity that you've built up over the years from hard work, from renovations, from increasing rents, from lowering expenses, from all these wonderful things, all this hard work that will allow you to free up a lot of capital, maybe invest it into something else, or maybe even just keeping it. I'm a big proponent of just keeping cash and liquidity high.
Yeah.
As long as it's not overly done, I think it's healthy.
Yeah. So what are some of the metrics that guide your decision making?
Sure. I would say a lot of it is obviously cash flow.
Yeah.
Also, obviously, I would have to look at the market and I have to see what somebody's willing to pay for it. If I'm able to provide a good return to the next owner, then it's a good opportunity to, or a good time to let go.
Yeah.
I learned to look at everything. And like I said, I have to just be creative with the tools at my disposal. Definitely, the equity that I built is a big driver of it. And the fact that I know that if I look for a good opportunity, I will find it. I just have to look hard enough and it'll be there.
Yeah.
I guess that's one of my advantages being 15 years in this market is that I've learned to identify a good opportunity with creative lenses.
Mhm.
But
Yeah, and so one of the things you mentioned too is knowing when to let go, which leads me to one of our finishing questions, but like how do you balance emotion and logic?
how do you balance emotion and logic is a great question. I always try to think ChatGPT would.
Yeah. Yeah.
Emotionless.
Yeah.
Don't fall in love with real estate. If you have a falling out with a partner, then think about it. What in a logical sense are you? doing what you're doing to get back at them emotionally, or are you doing what you're doing because it's the best for the business?
Yeah.
Always try to take a step back, ask others what they would do. That's a great tool
Yeah.
that's not used enough in this business, I think,
Yeah, I
because
agree.
everybody keeps the information so close to their chest, they forget to ask others what their opinion is.
Yeah.
And nowadays, you can just ask ChatGPT too.
Yeah. Oh, absolutely.
So you can actually get it from the horse's mouth now.
Yeah, absolutely.
But yeah, try to think about it in a rational way that's not full of emotion. Try
Yeah.
to take a step back and see if keeping that asset or getting rid of that asset is the most rational business decision.
Yeah. It sounds like you've got some great tools for people who are interested in commercial real estate. Can you maybe share the mission behind CREU online?
Oh, absolutely. So we have a commercial real estate university. That's what it stands for. CREU.online was made after trained hundreds of students in the commercial real estate arena. And the biggest complaint for my students was that I was doing these segments and these classes, I was doing them live, and
Mm.
every class was 3 to 5 hours. It was honestly great information to teach someone, but the main complaint was that it was just information overload.
Yeah.
And so we started filming these classes and letting people actually learn as they go. And
Mhm.
it's been pretty successful. People really like it. It was actually filmed in a real class that I gave with real students asking real questions.
Yeah.
And yeah, we have over, I believe, 40 hours of me speaking on real estate, my experience, showing people real options and real deals that we worked on. I haven't had a dissatisfied student yet.
That's awesome. Who is this platform built for? Is it for people looking to get into real estate or already are they new into real estate? Who are some of the demographics that you've been attracting to the university?
Absolutely. I would say beginning or graduating investors. As we've covered, a lot of folks like to go into flipping homes first and then they like to graduate out of that when they see the light. And so it's built for folks like that so they can get comfortable with the world of commercial real estate, which traditionally has been a very kind of closed off industry and everyone thinks that only the professionals should be on it, quote unquote. This actually allows you to become a professional, get comfortable with that arena to the point that I want you to see the difference between residential and commercial and sometimes even how riskier residential investment can be.
Yeah. Yeah, absolutely. So what kind of makes it a little bit more different than other programs? I know there's programs like CCIM, and I think you're exactly right. And there's a need for the accessibility to this education. What kind of sets it apart from, say, like the CCIMs out there?
Oh yeah, absolutely. Obviously, I don't think it's a comparison. CCIM is a big nationwide organization that adds to your professional designations. But I think really what CCIM has to offer is a big network of folks that are already CCIM, like a cult.
Exactly.
Well, we're not like that. It does allow you just to train yourself
Yeah.
in not such a rigorous and test-driven
Yeah.
course, but
Yeah.
rather actually teach yourself as you go, taught by somebody that's actually owned 100%
Mhm.
actively,
Yeah.
rather than just owned or leased assets or even has 30 years experience leasing property. That's
Yeah.
not what I'm talking about. We're talking
Absolutely.
about full
The
ownership of property.
practicality. It's not just head knowledge, it's the that you get to learn the hands-on real life situations.
Correct.
Yeah, I
Yeah,
love
that's right.
that. Boris, thanks for your time. I would love for you to tell people where they can find you. We'll have it in the show notes and all of that, but where can people find you?
Yes, absolutely. The name of the online university is CREU.online. Again, if people want to explore that, if you want to shoot me an email, I would welcome it. Please send me any deals. I'm always buying cash deals. I'm always buying any commercial, like value add in the Texas area. And you can reach me at boris@sanmore.com.
Awesome. Thanks so much for sharing so much of your experience to us and with us. And I look forward to much more success for you. And thanks again for taking the time to join us on the show.
Thank you, Caleb. You're very kind. I appreciate it.
Of
Have a good
course.
one. All right.
All right, that's a wrap on this episode of Commercial Real Estate Unfiltered. I hope you found value in today's conversation and feel more confident about navigating the world of commercial real estate. If you enjoyed the episode, be sure to subscribe, leave a review, and share it with somebody who could benefit from these insights. You can connect with me, Caleb David, and the team at David Commercial Real Estate. Just check the show notes for more information. Thanks for listening, and remember, creating space is more than just real estate. It's about building community. See you next time.